We're at the European Investment Bank in Luxembourg, and it's a pretty good place for me to figure out whether I need to invest in buying more toy blocks to paint a clearer picture for you about the kind of investments Europe needs, be it public transport, energy-efficient cars, or city infrastructure. Investment levels have improved since during the crisis, but take a look at the kind of forecast we have for 2016, 17 and 18, and you see that it's stagnating and in some cases actually below pre-crisis levels. Think of trying to increase investment levels like trying to solve a Rubik's Cube. You're dealing with a complex set of barriers that range from regulation to market size to political uncertainty. Now, one way to try and solve something this tricky has been the European Fund for Strategic Investments, or EFSI, which we've been telling you about for the past 2 years. Here's how it's done so far.
EFSI is a tool to fill Europe's €500 billion investment gap. In the 18 months since it kicked off, EFSI has approved hundreds of infrastructure projects and SME agreements across Europe. In total, EFSI has raised €30.2 billion of financing, which is expected to trigger €164 billion in investment. That's halfway to EFSI's target investments by 2018 of €315 billion. EFSI 2.0 has proposed to extend this 3-year investment plan. But what will that mean? The EU guarantee increases by €10 billion, and the EIB's capital used towards EFSI projects will be raised by €2.5 billion, meaning EFSI will have a €33.5 billion base, raising the target of investments to €500 billion.
Who better to tell us whether Europe's investment picture is dull and gloomy or brightening or somewhere in between than the European Investment Bank's president, Werner Hoyer. EFSI, EFSI2, along with a flatlining in investment rate, kind of indicates that maybe investing in risky projects isn't changing the environment. What is the missing link here?
It is not just a question of speeding up the investment process. It's also the necessity to make the environment more favorable for more investments. And I think this is where we are stuck. Liquidity is there abundantly. Secondly, I believe projects are there, which are very good. So why does this liquidity not go into these projects? The confidence of the people, in order to get the investment machinery going again, that's still insufficient.
Well, considering that corporates are the ones investing at this point compared to governments, 3 times more than them, how do you push them further?
People need some certainty for their planning. If somebody who is expected to invest into renewable energies cannot be sure that the conditions for feeding in renewable energy into the systems will be changed after 2 or 3 or 5 years, then he or she will be very reluctant to take the risk. The main job of governments nowadays is to give certainty. Infrastructure is one of the main weaknesses, by the way, both in the United States and in Europe. We must urgently improve our digital structures. These are things where you can bind the electricity infrastructure of a city with the need to be able to transmit data in real time. This is just one example. Roads and rail tracks and energy transmissions is another one.
Lisbon is one of those cities that is actually trying to do this, filling a gap left by a market failure in Portugal, where municipalities can't go to the capital markets to raise money, and banks are really struggling to give them the long-term funding that they need. So Darlene Hassan went to Lisbon to see how they're planning to invest in the city's regeneration and infrastructure.
Ambitious vision for a costly mission, Lisbon has plans to reinvent itself through several infrastructure projects. The new look of the city is backed by €250 million, a loan from the EIB under the Investment Plan for Europe. So, how is Lisbon making the most of this money?
The goal, making the city more attractive to visit, live and work in. The challenge, for the municipality of Lisbon to improve people's quality of life and generate more investment. In addition to EIB's loan, another €274 million has been dedicated by the municipality to projects of urban renewal and other parts of the economy.
A whole amount of more than 524 million that is going to be invested from public money public authorities, IAB and the municipality in the next years in Lisbon. And this investment is going to foster and is going to grab a lot of private investment. Because in the city, when we invest in urban renewal, it's a key issue to drive private investment for the city.
Solving the city's critical issues is key in its investment plan. 185 million euros for Lisbon's drainage master plan to address flooding includes 2 tunnels crossing the city, creating more than 1,500 jobs during the project.
The Lisbon Drainage Master Plan will be implemented for about 15 years. The place we are here now is the place where we start the first drilling, and we'll start the big tunnel, 5 kilometers.
The drive for urban regeneration with social housing like in Boa Vista Eco District is critical to allowing private sector companies jump on board. Gabriel Coutu is one such construction company. It won a €4 million public tender to construct 50 housing units.
2 or 3 years ago, these huge projects were impossible to have in Portugal. But in our opinion, they are not enough, and we need more projects like these. In a contest like this, you have around 50 to 20 construction companies competing to win these projects.
And that's the challenge across Europe, trying to balance the books, create investment opportunities, and drive in investors to generate growth.
As cities like Lisbon try and become investment honeypots, the spotlight of lack of investment falls straight on Europe's SMEs, Europe's biggest employers. Mr. Hoyer, is this a case of a lack of access to finance or something far more fundamental?
If the governments take the framework within which we would have to invest, if they strengthen this framework, then I believe that the inclination to go in more into risk and to go back to an entrepreneurial spirit, which has always been the most important feature of our SME business in Europe, will come back. Access to finance is a problem on a continent where 80% of financing for SMEs and for corporates goes through the banks, not through capital markets. So we are still at a huge investment gap.
Or will banks lend? Private banks start lending?
Let's be honest, the maneuver space for the commercial banks has always also been reduced over this time. And a public bank, I believe, has the job to boost the investment engine again by financing good projects. This year, I'm quite confident that we will have a stabilizing effect also through the election process in many countries in Europe. And I think this will give a new boost.
Mr. Hoyer, on that note, thank you very much. And thank you for watching. We'll catch you next time.